Hi, this is Bob Litchfield. I'm an attorney in Auburn, California with an office in Roseville, and this is another part of our series on advice for success for entrepreneurs. Success in entrepreneurship. Now, we've started with a brief overview of the forms of business ownership, the most commonly used forms of business ownership for your new business. Now let's break each one of them down, and today we're going to talk about sole proprietorships, the advantages and disadvantages of owning a business as a sole proprietorship. So first let's look at the advantages. Well, obvious. First of all, if you own the business all in your own name, well then, if the business takes off and is really successful, all the profits go to you. You don't have any investors or any partners that you have to split the profits with. So, if the business is successful, you'll make more money. Second thing is, management and control is all yours. You don't have to share any of the decision-making process with partners. You don't have to be accountable to investors for your decision-making processes, your decisions. All the decisions are yours. You have complete management and control of the business. Another advantage is that there are, generally speaking, lower startup costs for a sole proprietorship. Very often all you have to do is hang out your business sign, perhaps register your fictitious business name, get whatever necessary business permits are required, and you're in business. You don't have to pay thousands of dollars to a lawyer to form a corporation for you, or a limited liability company, or a limited partnership. So your startup expenses are much lower for a sole proprietorship. Tax-wise, there are some advantages to being in a sole proprietorship, because as the money comes in, it only gets taxed one time as your personal income on your personal income tax return. Whereas if you were, say, incorporated, there is a possibility that the money as it came in would actually get taxed twice. Once as it came into the corporation as income to the corporation, and then once again as it went out of the corporation in the form of dividends or salary as income to the individuals who own the shares of the corporation. So another advantage of sole proprietorship is income tax. The money gets taxed only once. There is a caveat to that though, because very often if you're the owner of the business, you're going to be subject to the self-employment tax, and that adds a little extra to a significant amount, actually 15.3% added on to the normal income tax. And you know, there is some additional tax planning that you can do. You can set up KIOs, you can set up SEP IRAs. There are ways that you can set up some retirement benefits for yourself in a sole proprietorship. So those are the main advantages of a sole proprietorship. What are some of the disadvantages? Well, just as all of the decision making is on you, so is all the liability. If anything goes wrong, whoever your creditors are, whoever might sue the business, they're looking to you individually for compensation. It all comes out of your pocket. You have no partners to share the burden with. You have no corporate shield from liability. All of the liability is yours. Along those same lines, in terms of the cost of starting up the business, you have to come up with all the money. You have no money from investors, you have no money from partners. You've got to get loans or have individual wealth, or you've got to find a way to come up with all of the money for the startup costs of the business. Another disadvantage to sole proprietorships that's not talked about very much, but which is a really big deal, is what they refer to as business continuity. And the business continuity problem shows up in a sole proprietorship in two different ways. One way is if you're the only one that's there running the business and you don't have well-trained employees, the business basically lives and dies with you. So if you get sick and you're out for a few weeks, the money stops. The rent doesn't stop, the overhead doesn't stop, but the income stops and you're in trouble. If you want to go on vacation and be gone for a couple of weeks, the money stops. So vacations are often out of the question, and I have known sole proprietorship entrepreneurs that have owned and operated a business for 17 years and have never been gone on a vacation during that entire 17-year period for longer than a 3 or 4 day weekend. So if you want to have some vacations, you may want to reconsider sole proprietorship as a form of business ownership, or at least consider hiring and training some reliable employees. The other way that business continuity shows up as a problem is, are you building up anything that has a value that when you die you can pass on to your heirs? Can this business be sold, or does this business live and die with you? If your business is Joe's wonderful window washing company and you are the one and only window washer who washes the windows, when you die, the value of your business may be the value of a few buckets of soap and a few ladders. The business may die with you. So sole proprietorship, business continuity is a problem. Of course, if you have a group of well-trained employees and the business can live on without you, then you may have something that you've built up that has value to pass on to your heirs. Okay, I think that covers the biggest disadvantages of a sole proprietorship. You have to come up with all the money. Raising capital is a problem. You have a potential problem with business continuity, and all of the liability is on you if something goes wrong. And there's no shielding from liability as there might be with a corporation or an LLC. Before we finish with sole proprietorship, though, let's look at one other thing. You really, although a sole proprietorship is usually much less expensive to set up than other forms of business ownership like a corporation or an LLC or a limited partnership, there are still some things that you must do to comply with government requirements. If, for example, you're going to have a fictitious business name, that is a name for your business that is anything other than a name that includes your personal name, generally the law says that you've got to register that as a fictitious business name, and there will be some expenses involved in doing that. Also, depending upon what kind of business you're in, there may be government permits required. You may have to get a business license for the city or the county where you're going to operate the business. If it's some kind of food service business, you may have to have health department permits. So even though a sole proprietorship is the simplest form of business ownership to set up, there are still some things that you've got to do to comply with law and regulation. You may have problems with zoning and building codes. You may have import-export regulations to comply with. And you've also got to register with the state and the federal tax entities and make sure that you get all your taxes paid. All those things having been said, though, very often the sole proprietorship is the most popular starting form of business ownership for a starting small business. Less expensive, complete management and control, the right to all profits, many things very desirable about it, at least at the beginning. And you know, just because you start out as a sole proprietorship doesn't mean that as your business grows and your tax liabilities change, you can't later incorporate or form an LLC or some form of partnership at a later date. So that concludes our talk on sole proprietorships. On another tape, we'll discuss corporations, LLCs, and partnerships. Have a wonderful day. Good luck. Bye.